Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I wanted to give you an update on the S&P 500 because I know that um, people are rattled and some are looking for opportunities, some are trying to preserve what they got. So I'm going to do my best here to appease both of you. So let's get into it. Little background, this is a long-term chart of the S&P 500 going back to 97. Probably some of you people weren't even alive. Um, but this was the boom of all booms back then. We had about a 3-year negative divergence. As prices hit higher highs, we got lower highs on our RSI flashing a caution sign, beware, a change of trend is coming. And sure enough, I want to say uh, I don't remember actually the loss then, but on a percentage basis, it was huge. In 2007, we had only, I think it was an 11-month negative divergence. We had that crash, which this is the mother of all bubbles right here. We got a one, two, three, four, five or so 5-year negative divergence. And so those of you that have watched me over the past year, I think I've been doing this for 35, 40 years. So I'm a CMT, chartered market technician. I had the great privilege of being able to talk to the great Alan Shaw and Luis Yamada. So I've seen these things before. I've been through all these crashes, and this is big, So the big picture here, as I've tried to communicate, is, at some point this is going to matter, but that doesn't mean I can't take advantage of things while those 4 years go on. So let's take a look at the last 3 or 4 years. So this is the bullish channel, smaller bullish channel, and me talking since November about the overbought condition of this. This is our bullish channel, support resistance, where we were over this resistance line for 3 or 4 months. And I said that's going to matter at some point. Even on the weekly chart, we had I don't know, a 7, 8 month negative divergence, and then we get our decline. So what I talked about the other night, I think maybe last night, is on the weekly chart, we have a rainbow convergence, the Tom McClellan tool that I want to give him a shout out on that. But basically, when all these moving averages come together, we get two scenarios. One is the decline pauses until the moving averages move down, and then they test prices. And if they're able to break through, we can go up. If they can't, we go lower. And then type two is that we get a retracement back towards that convergence. Now, I'm thinking, and again, I don't want to think, right? I just want to look at the chart and make a decision. But with the VIX at a very high level, which I'm going to look at, most likely we're going to get some big short covering rally soon as these lines all touch. And when that happens, then prices need to get above, I don't know, 5,700 to have a chance at new highs. But I want to be involved in this. And then if it fails at 56, 5,700, I will go back to a bearish stance and hopefully time that right and be short in a bigger way. So that's the weekly chart. So let's take a look at the daily chart, just this decline. And, this is what I went short here a little bit early. We bounced around. My stop was 6,100. We came down. I went neutral on March 11th, went bearish again on March 24th, went neutral here just, what's today? The 8th. So it was just yesterday. And That's where we're at. We got an oversold level on the daily chart, but of course, it can get more oversold than that. Look how overbought we were back here. And we also don't have any kind of a positive divergence to play on where we get a lower low and then we get a higher low on our relative strength index. So we don't have any of that. So I'm just going neutral right here because I want to see what transpires by the end of the week. Let's look at the intraday real quick. So here's the intraday. So on last night, I said, you know what? I don't see this as complete because we're obviously in a downtrend and we should have according, so in my trusty toolbox as a market technician, one of the tools that I'll use is the Elliott wave theory along with 20 other tools. And the Elliott wave theory believes that trends are cycles go in waves of five, with 1, 3, and 5 in the direction of the bigger trend, and 2 and 4 are counter trend reactions. And so when I count this, I got 1, 2, 3, 4. I think we need one more low here. And if we get that, this is only an intraday chart, so it's not as big as that monthly chart we saw at the beginning, the weekly chart where each one of those bars represented a week, or even the daily chart. Each one of these bars only represents 2 hours. So this is a trading mechanism. But if we were to hit another low and we get a positive divergence with lower lows on our price and higher lows on our relative strength index, I'd be stepping into that a little bit. And maybe by Friday we get something like a bullish hammer. Now, here's a bullish hammer. So prices opened the week up here, traded all the way down, and then by the end of the week came back close to where the week started. And then look, we got a nice rally. So I'd like to see something like that. I don't think we can get that because of where the body of this weekly price action is, but we could get something like a doji star where the opening price and the closing price are equal, which would show us that this is according to Japanese candlesticks, one of the tools in your toolbox that would tell you that the bulls and the bears fought to a draw, and maybe that would give us some inkling that prices are going to go higher for a little bit because, if prices move from here up to 5,600, and I'm not saying they're going to, but there's a possibility. I want to participate in that. So I want to make sure, we're at a neutral stance. So I'm really not short or bullish. I'm in the middle. And I'm waiting for something to tell me what to do next. Hope that made sense. But I would like to see another lower low and a higher low here on the intraday chart. Each one of these bars represents 2 hours. This market is really oversold, but that again, it doesn't mean it. I mean, we got a 4.5 year negative divergence on our monthly chart. So, would it surprise me to see higher levels on the VIX than what we've seen in the past back in 2008 and 2000? No, it wouldn't. So, I'm never going to go all in. I'm going to do it in a controlled way and do it with as little risk as possible. But we're up to 52 on the VIX. How many times did it close a month at 52? Once, twice. So it tells you that if you're short, you better be really, really, really careful. So I hope that helped. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors and your mother. Have a great evening. Adios.